afternoon, good evening, traders from across the globe, and welcome to the 1481st edition of Short-Term Trading Live with Oscar. Good evening, traders. Oscar Carboni being me. I am here to teach you the art of technical analysis, how to read the charts, and how to use that information going forward. This 1481st installment of these educational videos is coming at you on a, what night of the week are we in? Monday. I have no idea. It's only Monday. Coming to you on a Monday night for Trading Tuesday. That's June 21st, 2016. I started on Sunday morning studying for these markets. It already feels like it's Wednesday or Thursday. My goodness, it's going to be busy. So, before we get into what's on the board, and I've got some topics I'd like to discuss with you, you must recognize that futures trading is extremely risky, causes substantial financial loss, is absolutely not suitable for all traders. Don't do this, don't try this. If you don't recognize that a stop can be your best friend in this business, put your stops in before you even get into your position. The stop will knock you out on almost all occasions if you don't do anything about it and it goes against you. Put your stops in, put them in first. Let's move forward. Traders, you've seen the videos I've produced lately. You see the chart patterns. I've been showing these to you for several weeks now, and it looks like they're starting to actually take a little bit of hold on the markets. You've seen some pullback, not all that much, but some pullback. I will say this. One day of stop running, where a market rallies up, turns around and comes back towards its lows at the end of the day, does not change short-term chart patterns. It just doesn't. Monday, markets run up, stop everybody, turn around and come all the way back down. That does nothing to change the current landscape. Just want you to know that. If you got very happy about today's rallies, you're shorting because we were short and we got stopped right near the highs before it turned around and dumped. Traders, my bad today. I know I lost today. My bad. The stops were just a little bit too small. I mentioned in the Omni today, you're going to need huge stops. Volatility is going to widen. We made our stops wider. They were not wide enough. The markets took us out right near the highs, and it dumped. What can I say? That's how this game works every now and then. Thank you. I know. However, I am me, and I'm not standing for this. Hey, we did make a bunch of coin and gold today, but it did make up for what we lost in the indices. All right, so, traders, let me just say this. Newspapers, I'm an avid reader of the newspapers. I read everything from Stocks and Commodities Magazine, Investors Business Daily, the Wall Street Journal. I read just about everything I can get my hands on, especially on the weekends. I read all day Sunday for hours on end. What I get from the papers, and I'm also an accomplished fundamentalist. I use the charts exclusively, but traders who know me well enough know I am a very accomplished fundamentalist as well. So here's what I get from the newspapers. The fundamentals and the newspapers look much rosier than does the current short-term chart situation that we see here, the chart patterns. Oil fracking, for instance, the technology has gone so berserk with oil fracking that they can now get to the bottom of a well in 18 days. The same well would have taken them a year just 2 years ago. Just 2 simple years ago, it would have taken over a year to drill the well, let alone produce from it. They can now drill a fracking well, some of the companies, in 18 days. They have found that there's so much oil that they're leaving behind, 80% of the oil when they frack. They're figuring that out now. We have become monsters in how to produce oil and how to produce it very quickly, very efficiently, and it's getting produced cheaply lately, and you can see that in the markets. So we've got that brewing, right? We've got so much oil, it's got to help the economy. Then they will be adding the 11th market sector to our markets. Right now, we've got 10 sectors that we talk about. We've been talking about them for years on end. They're adding the 11th market sector, the real estate market sector. They're going to put a bunch of ETFs and stocks in that sector. That is supposed to attract tens of billions of dollars. There's other things in the papers that make things look so damn rosy, but you know what? I don't see it on the charts. Now, The chart read, as you know, it's not an exact science, it's a fine art. It could change like that. The chart read by tomorrow can start to change dramatically. But right now, the chart read I've been showing you points to the possibility that we are topping out for a little while here. And I'm not saying the top is in on the big bull market, but a break is coming our way, a setback. So that's what the charts show me. That's what I've been showing you. I don't read it in the papers. I don't see it in the economy. I see it in the charts. With that in mind, let's look at this board. Will lightning strike twice? The NASDAQ chart, I think you'll see exactly what I'm talking about. Remember, will lightning strike twice? Wait till you see the NASDAQ chart. One day, I will repeat, one day of stop running when the market runs all the way up, turns around after stopping everybody out, and dumps towards its lows or just about into its lows. That doesn't change the current landscape. All that does is pick our pockets. The ones who were short without the big enough stops, because it came right back, right? So we're back to where we were. Is the Swiss franc flagging a signal? My gift to you, Omniacs. Wait until you see this. Traders, with no further ado, I'm going to show you two things. One, a bunch of great charts I think you're going to love. And two, just a little clip from my Omni camp, because I had a fantastic Omni camp just a week or so ago. Really enjoyed their company. And my editor put together a quick little blip, so I'll show you that too. With no further ado, let's go look at some charts.
I drove 29 hours from Wisconsin to come down here, drove it straight through. And on the way down, I was expecting to perhaps be tired somewhere along the way because it's a long drive. And I was up essentially for probably a day and a half, but my mind was just racing all the way down. I had so many things that I wanted to learn. I had so many questions that I wanted to ask. I was so excited about being able to come down here and meet him in person, because he's just a force of nature when you see him on these videos. He's every bit as fun and informative and genuine as you might suspect, and just the whole way down I was completely engaged in wanting to be here.
I've been watching him for the last 8 months, and of course I was skeptical when I saw his flashes and all that, and then I started watching and seeing what he was doing and seeing what he was doing, and I was quite impressed by what he was putting out there, so I had to come and see it.
I came here because I saw Oscar on the internet, of course, joined the chat room, was impressed with his apparent track record, and so I bought the course to learn how to do it myself.
I was learning along the way, as in the chat room, things would pop up, and I definitely recognized within a month or two that it was very, very powerful what was going on. It was very, very, there was a lot of possibility. I saw the possibility, but yet I understood within a relatively short period of time that it was very, very difficult for me to do without having the extra additional knowledge about what Oscar does. So that's why I made the decision and was very, very fortunate to be able to come out to this first Omni Camp 2.0, and I'm very, very glad that I did.
I had big expectations regarding his system, and this whole experience just blew my mind. I mean, it over-delivered expectations, for sure.
Why create mediocrity when you can imitate genius? And to me, Oscar is a genius in this business because he's studied it more, he's tested it more, he's tested it with his own money and continues to do that. What better validation could you have?
Okay, traders, we start off tonight's video. The first chart, the same song and dance you've been hearing from me for a couple of weeks now. The big head and shoulders in the emini S&P, the expected run-up for the head test, the failure at the head test, a second try failure so far. We're still in that area. We haven't dumped from it yet, but you see it's having trouble here. Remember, it's a fine art, not a science. Nothing says it has to go down. Nothing says it has to go down, but you never know. The pattern certainly does say it should go down. Let's see what happens from there. Let me show you a few more charts. Staying with the weekly theme, you've seen in my last few videos the NASDAQ weekly chart. It got right exactly to the head test area and came right off immediately. Staged a little rally, didn't even hit the head test area, came off again. So the NASDAQ is absolutely respecting this pattern right now, and the next move should be lower. But we'll see. This is a weekly. We'll take it one day at a time. Traders, one more weekly chart in the group for now. The Russell. As you can see, same pattern, but the Russell never got anywhere near the head test. Never got near it. What happened, the Russell, is it ran into the Omni Trading Academy's proprietary moving average, better known as OTAPMA, and failed miserably. Bang, bang, just like it did here and here and here. Failed miserably. What happened after a few failures? The dump came. Here, you started to get a little bit of a look like this one. We'll see what's going to happen. Maybe there'll be some back and forth play for a little while, and then it makes a decision. Remember, it's a weekly chart. None of this happens right away. Next, we move out to the daily. This is an interesting chart. Take a look at this. You've got the Omni Trading Academy's proprietary moving average. You've got the 200 bar moving average. They seem to be coming together, and what I like about that, if I were bearish, and right now I think I have to be, two reasons. One, you can absolutely call this a bear flag. Two, the last time the Omni average got up above the 200 bar moving average, we had a massive crack. Right now you've got the Omni average, it's not above it yet, but they're on a collision course like they were here. And once the Omni flipped above it, the market dumped. Right now, will lightning strike twice? That was the question on the board. Lightning struck once here. Will it strike twice? Well, this certainly does look like a bear flag, and those averages are coming together as they did here. We will see. This is a daily. It should happen right away. What's going to happen should happen shortly. Then you've got the Dow Jones Transportation Average, and what you've got here in this case is the average crossed already. Your 200's below it at this point. The leader says that's going to happen in the NASDAQ because it already happened in the transportation average, being the leader of indices. Interesting, right? This is a daily. Next, is the Swiss franc trying to give us some sort of a signal? Is it flagging a signal? Here's your Swiss franc chart. We know we've got the Brexit vote coming in 2 days. We know we've got Aunt Janet speaking all day tomorrow and all day Wednesday, and things are going to go crazy and the dollar's going to move. Is the Swiss franc trying to tell us something? Well, here's the Swiss franc. It is the exact same chart with just a couple of lines on it. The bull flag, a textbook example. A very quick flagpole, a sideways consolidation. You could not ask for a better bull flag than the one in the Swiss franc right now. And while that's happening, look at the dollar index. Back to a weekly now. Dollar index. Failing at OTAPMA, gets below it, tries to get back above it, fails, tries to get back above it, fails, and builds a bear flag where? Below the OTAPMA. Interesting, isn't that? Maybe the Swiss franc is flagging. We'll find out. I want you to take a look at these charts for yourselves. The Swiss franc is my gift to you. So, traders, you've seen the charts, and you know what? The newspapers, the fundamentals say go. The charts say no. It's going to be an interesting summer, isn't it? It's just getting warmed up. It's going to go nuts this summer. Hey, the charts usually keep us in tune. I will keep you in tune at livewithoscar.com. Come down to my free trading room. The site is free. The trading room's free. I'll be there to help you out. I'll see you at livewithoscar.com. Remember, keep your emotions out of trading. One of the best things, in my opinion, that you can do to try to keep those emotions at bay, and I recognize it is not easy these days, but try this. Say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll Omni Camp 2016 in September. Fill out your applications. I'll give you a call. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.